actually haven't met him, Mike. So that's, he said that she certainly enjoyed coming. I don't know what happened, but she's not here this evening, but we'll go ahead and get started. This is graduation night, so, so we appreciate everybody giving up their time to come visit with us and let us share some information with you the past few weeks. It's gone by pretty fast if you think about it. And we appreciate your attention and your dedication to our class, and we hope you have picked up a lot out of it. And like I said, as a First State Community Bank, we want to be your resource, for success. And hopefully we got that in the right direction. As I promised, we do have a treat for you again tonight. We've had some interesting speakers. Well, that continues. And with us tonight, we'll be talking about credit reporting and management succession. And we have with us tonight our special guest is Chris Wigger. He's the president of our Ironton branch down in beautiful God's country, where they filmed a movie in the last few years.
Resurrection. If you watch the show Resurrection, it's based in Arcadia. It was not filmed there.
Not filmed there, but it's based.
But it's based to be in Arcadia.
And we have Kevin Cook, who is our president of our Bonne Terre, Terre de Lac, Deloge branches, and part of our system and part of our FSCB family. With us tonight, we also have Debbie Coletti. She works in our loan processing, and she works on loans in our Hillsborough branch. We have Martha, and Martha, she is with us, and she comes from our Hillsborough branch, and she's First State Financial Management, non-traditional. And everybody remembers Ed and Kevin. Ed's at our Imperial branch, senior lender, and Kevin's our president of our DeSoto branches. We won't take any more time. They got some good information to share with you today. Just we'll go through the credit reporting after our presentations. We have a survey we'd like for you to fill out, and then we'll also have a drawing for an iPad for those that have made it all of the sessions. So you know who you are. So we're excited about that. We're excited to also have Chris and Kevin here. And I will turn it over to Chris. He'll begin the presentation for us about credit reporting. Chris? Thanks for coming.
Okay, I don't know how the other speakers have been, but I can tell you, first thing off the top of it, it's going to be pretty informal. So if you all feel like you want to jump in anytime, just feel free to do that. I'll tell you, Mr. Cook will be jumping in at some point in time, but you never know where that's going to be. We like to keep each other guessing. So he may be standing up here doing something in the middle of my little dog and pony show, and I may do the same. You don't know what's going to happen. It's all kind of fun and games. So I was in a training session this morning. The guy says, okay, I'm going to spend the next 2 hours talking about credit. Thank you. And you guys are probably thinking the same thing. He's going to stand up there and talk about credit. Well, we're going to look at it from a few different angles. But it's vital. I mean, those of us who have not won the lottery or weren't born into wealth know that credit's about the only way you can make a major purchase. It's the way we all survive. So it is also one of the 5 C's of credit. So for us in the banking world, credit is vitally important and may be the most important of the 5 C's. And the 5 C's of credit are, first and foremost, credit, collateral, capacity, which is the ability to repay. That's a big topic nowadays in the banking world. Capital, what's a person's financial statement look like? What can they fall back on if things go bad? And then character, which I may argue that that's the most important, because when someone gets backed into a corner and times get tough, character usually comes out. Could be a good thing, could be a bad thing. And I'm not sure about your booklets and your slides, so I don't know where yours start, but this one in my book is 12, and that may be like 3. It is. With yours? Okay. Credit reporting is important. It provides information to banks, lenders, investors, landlords, other businesses, government agencies. Absolutely. It can help you not just get a job, because a lot of people are looking to employ someone, pull a credit report on, see how how you take care of your responsibilities. Insurance. You go get insurance for your house, your car, whatever that is. They run a credit report. That dictates the rates that you get, so it can help you there. Certain licenses, if you're skilled maybe in a nursing profession or a profession of some sort where you have to be licensed, it can either prevent you from getting a license or help you move through the process pretty easy. So good credit is very important there. Terms and conditions on loans needs a world of difference. What your credit looks like. And we've all been forced into a world we didn't think we'd ever get into, but using credit scores was something we never thought we would do. But the government has pushed us into that corner, and so we now do it. The higher the credit score, the better the terms, the better the rate. It's just a part of it. It's a system that we live in. It can impact, the three ways we want to look at this tonight is a borrower seeking credit, which maybe we've all been in that boat, car loan, house loan, whatever that may be. A report user. So if you're in a business where you're pulling credit reports either on a vendor that you're using, or it may be on some customers that you might be looking to extend some credit to, or a reporter of credit information. And if you venture off into that world as a reporter, it's very, very restricted. Where it happens, your physical location, the office where it happens, has to be inspected. Your people have to be trained, your computer system has to be approved. There are all kinds of things that get into that reporter of information world. And so I don't know if any of you are thinking of doing that with the business that you're going into. And when I get to that, can you take a minute and tell me maybe what businesses you're either in or you're looking to get into? And that may help both of us tonight.
Well, I'm actually here with him. He's the one who gets into business. I'm here to help.
Okay.
Help take in information and help get the business going.
What are we looking at?
And I'm looking at working with metal finishing shops and electroplating shops, on helping them with their business.
Okay. And Lisa?
I have a beauty shop.
Okay.
I have a frozen food place
Existing?
existing,
Okay.
and I order the foods and then resell it to people.
Okay.
I'm going to be in the legal nurse consulting, working with attorneys.
Okay.
I couldn't hear one. What was yours?
Legal nurse consulting, working
Oh,
with attorneys on medical
yeah.
malpractice.
Okay.
I'm not used to this at all.
That's what I say, I'm here for you.
Maybe bouncing back and forth.
If you need to go back, let me know.
Couple things, if you're going to start a business credit file, you first have to have an ID, tax ID number. But then you have to get what's called a data universal number, DUNS number. And you can do that by submitting your financial statements and registration information to one of the three major credit reporting agencies. Now, when you say that, a lot of people cringe. Do you want to do that? Turn your financial statement, your credit information over to these people? I don't know. That's something certainly to take into consideration.
If you were going to,
If you're going to subscribe to a credit reporting agency, you're going to have to submit this information to one of those three credit reporting agencies. Has anybody had a credit report that's helped you in business? Anybody pulled one, read one, used one, researched one? No? Ever looked at your own?
Business.
It may be something good to do, and we'll get more into it when we're talking about personal credit reports here in a minute. But if something gets on your credit report, whether it be your business or your personal, the longer it's on there, the harder it is to get off of there if it's incorrect. So keeping an eye on your credit reports, whether they be for you personally or whether it's for your business, certainly is a good idea to make sure that the things that are showing on there are correct. Business credit report. It includes the credit risk score, helps indicate or predict the potential of the business for failure or success, credit filings and extension for secured property, such as a UCC. So if there is something that has been already secured by a loan, and you put you on notice of that. Tells you business ownership information, other businesses that are connected. So there may be the same entity, could have other businesses that are tied to it, and public records of security filings. Each credit reporting agency provides a free business credit report, and for a fee, may provide additional information such as an agency summary of financial and non-financial accounts, public records of any Secretary of State business registration, scores from another reporting agency, and a payment trend or payment index comparisons from the same industry for the last 12-month period. So those are all things you can pick up from the report. The three major reporting agencies with a business credit report. First one is Dun & Bradstreet. Seems to be the most popular that we've used in our business. But also Experian and Equifax have a business side. They do their personal credit reports, but they also have a business side of their operation. Consumer Reporting Agency. Experian, Equifax, and TransUnion are the three companies that are used to provide consumer credit reports. And you can find their contact information on annualcreditreport.com. The thing you need to remember about credit of any kind, whether it be on the business side or the personal side, is treat it like your own. First of all, you have to have a reason to be pulling it. You've got to protect that information and not share that information. So if there are employees involved, employees have to be taught and trained that this information is personal, it's private, it can only be used for the business purpose that's intended. So it's just like your own. That's the easiest way to remember it. Treat it like it's yours and don't share it.
Chris?
Yep.
Something we noticed on the annual credit report, I can't read it, annualcreditreport.com.
Yep.
That site is the one that if you're going to get one yourself and look at your own credit, that's the one to really use. There are other sites that are, and they've kind of got the name really close to that, but there's a trick involved with them. If you use that site, they'll send you one next year too, but only the first one was free. And so then you start getting a bill for about 40 or 50 bucks every year when you think you're getting a free credit report when you first sign up. That site right there is truly a free credit report. The others there's a trick to them. And we've learned that with you could come in and actually got a negative thing on their credit for not paying the $50 credit report bill. But it's one of those tricks that's out there that somebody, and they make it look really close, like maybe it's almost the same words, but that's the truly free one right there.
Don't pass a credit report on to a third party. In doing so, you can be considered a consumer reporting agency, which can cause all kinds of legal liabilities. So remember, it's just for you. Okay, reporting consumer credit manages risk, which is the business that we're in. It's managing risk. And one of the factors used to determine risk is to determine someone's debt to income ratio. And if you've not figured that for yourself, the formula is pretty simple. Monthly income total, I'm gonna run out of room here. Monthly payments. Why did that get a percentage? It says in the material that I have here, and this was put out by the FDIC, that 45% or less is a good debt to income ratio. That doesn't work so well in our world. In our world, 36% or less is acceptable. So you can figure that for yourself, see what your debt ratio is. If you're in that 36% or less, that's great, in good shape. There's a kind of a gray area between 36 to 40, and that's what we get paid for, making judgment calls and working with people to improve that debt ratio. But if you get beyond 40, that's tough. That's tough. That rainy day comes to everybody. And when it does, it's going to hurt you if you're that tight with your debt ratio.
What's the saying we use is that Murphy moves in your other bedroom.
Murphy's Law. Yeah.
Something's going
Murphy's
go wrong.
living with you if you're living that tight.
Now, on the monthly income, is it gross or net?
Gross. One of the things that, as far as what shows up on the report, to keep in mind, some people are uncomfortable talking with folks about, hey, this is what showed up on the credit report, and think, oh, they're going to be mad at me because it's on there. That's the things you need to talk about, because maybe it doesn't belong on there. Maybe it's wrong. Maybe it's been reported wrong. So those are the things you need to talk to them about to try to get straightened out. And if it is theirs, it's an opportunity for us in our world to coach them up and work those things out, get those off of there. If it's not theirs, they need to begin the process of getting that off of there. So the sooner they know, the better they know.
Something else, I think while I'm talking so much, I might just better come up there.
Yeah, you might as well.
But one of the other things I noticed that doesn't happen, is that you are allowed to put, 300 words on your own credit report? I think it's 300. And a few people I see do. When something gets messed up, you do have the right to say, like, I had a car accident and I was unable to work for 6 months and blah, 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 whatever it was. You do get a chance to say that on your own credit report. You have to submit it in writing.
And those agencies are responsible for printing that.
And they'll print it. And I've seen it once or twice, but I'm always surprised when people come in and they have actually a very legitimate reason for why something has happened to their credit. But that extra step of getting it in writing and getting it on your own credit report, I think is huge. I think that's something that you need to do if you are coming out of, you know, a problem. And let me tell you, lots of people are coming out of problems. It's not to be ashamed of.
How do you do that?
You actually send it to that credit bureau, and there's a contact number.
If you go through the annualcreditreport.com, it gives you the contact information for Experian, TransUnion,
And you
and
want to send it
Equifax.
to each of those then?
It's not a bad idea, but,
You want to find out the report that was pulled that it was on.
yeah.
So if, like us, we use TransUnion, if it was pulled and it was on TransUnion, that's the one you want to contact first, and then work with them. Then you can go get the free one on the other ones and find out if it's on there also.
But I think more people need to do that, because there's lots of times very legitimate reasons why something's happened. And it's no slam, it's just that you're being judged for that without even getting your own say on it.
If you're going to consider reporting information to a credit agency, I kind of touched on it a little earlier, that your retail location must be a location with secured locks, and they'll come and inspect your property. You must have a separate office with secured files, hopefully fireproof, locks, and you control the keys. The protection of the data, both within the files, I'll go back, sorry, I touched it. With, nope. Within the files and also on the computer systems, they'll check that out also. It's expensive and it's something to keep up with. And then regs change, you gotta keep up with the regs. So if you're gonna be a reporter, then there's a lot to it that goes along with it. So if you're going to report directly, secure location, secure practices, minimum number of accounts reporting monthly. So you're going to have to meet their criteria, whatever that is. Our stuff's all done electronically. You can imagine we've got 46 locations. You know, the number of total loans, I don't know, within our whole organization, but that's all done electronically. But you got to meet minimum numbers to be able to do it. Software purchases for reporting and handling of disputes, and disputes are another thing. You have to acknowledge the dispute. If someone says you reported something, it's not accurate, you can't stick your head in the sand and pretend it didn't happen. You have to address it. You have to address it in a timely manner, and it's not going to go away. So you've got to prove that what you reported was accurate. You're on the defense there. Accurate record keeping and reporting is a must. Go without saying, separate setup fees to pull credit reports, and then the training of your staff can get expensive, and you've got a liability if one of them doesn't handle someone's credit properly. And you've got that burden. There are local and regional credit reporting agencies. I brought a sample of something that comes out. And this is down in St. Francis County. But this comes out every month, and it gives more than just one type of information. It tracks all the deed of trusts that are filed in the county. It's public information. You get all the warranty deeds that are filed also. You get foreclosures that took place in your particular county. Bankruptcies that were filed. tax liens that were placed, tax liens that were satisfied, judgments that were placed, marriages that were filed, and divorces that were filed. Why do you want to know that stuff?
Chris, if I could, you can get that same thing in this county, it's called the Watchman Journal, and it comes out
County?
every Friday.
If you're in business, and you're doing business with folks locally, you want to know what's going on. So you can use this information to help you maybe not make a mistake.
In this county, is there any what I would call local credit bureaus?
Oh, goodness. Sorry, I'm shooting at you.
There is not.
Not that I know of, Kev.
Yeah, I'm not sure that, one of the things that's really nice about, if I was going into business and going to be a small business, I would really find one of these rather than try to be a credit reporting agency. I would just go through one of these local ones. The positive thing about a local credit bureau agency, many of them do collections. So if you would happen to be in that kind of business and you're like, you know what, I don't have time to chase down the people that wrote me a bad check or whatever, that there is a way to connect to some credit bureaus and get both services, which can be really handy because, you know, you're going to have a lot of distractions starting up a new business, much less have to chase people down. So, but I don't know where you have to go. You have to get up to what, South St. Louis probably before you find a credit bureau up there that does this? Probably.
I don't think so, unless you have that. But what Chris has there, the county and the Kevin talked about is published right in Hillsborough.
Yeah.
It tells everything that you have there. It covers everything.
What's the
Tax
name
liens.
Where do you get that?
You can,
The county?
go online and get it with the Watchman, is it the county?
It's called the county.
County and the Watchman
They
part
post
of
all
it.
the legals too, and it's right out of Hillsborough.
It's not published by the leader, is it?
No,
It's
it's
separate.
separate, independent.
But it's handy, I've had a guy come in and apply for a real estate loan before, and when I got the journal, he was in there for foreclosures.
We have a copy in our bank that we have laying, that people can come and look at if you want to come to our branch here in Hillsborough and sit on the county. We can take a look at it.
One you sell like there's a website on there you can contact them and subscribe to.
Thank you.
Fair Credit Reporting Act. It defines consumer credit reporting. Can be used for business purposes, for use of the reports, consumer authorizations for use. The thing you need to remember about the Fair Credit Reporting Act is if you don't follow it, there could be fines and there could be jail time. The Fair Credit Billing Act. You send a bill out to someone, they dispute the bill. Like I was saying earlier, you can't stick your head in the sand and pretend it didn't happen. You've got to address it in a timely manner within 30 days. And again, there can be side effects to this one as far as fines on the billing. The risk and responsibilities of handling personal information on someone, non-compliance can include losing more than your business reputation. History tells us that the disputes that happen most often are with people that don't handle their affairs properly, and they're doing it primarily to cause you a problem. The folks that pay their bills on time, take care of business in a business-like manner, they usually are not doing that. Okay, personal credit impact on a business. It builds business credit with personal liability. Establish credit with vendors and suppliers. Build credit with your local bank. Build credit with your local bank. Build credit with your local bank. That's a great place to start. I mean, community banks are one of them. They're here, they're around you every day, they know your world, they know how it exists. Talk to these guys. Now you can expect on a business loan, if you go walk into a bank, any bank, you can expect to personally guarantee that loan. It's called having skin in the game. So if you're not willing to take some of that risk, then we're probably not going to be willing to take some of that risk. So the company's probably going to guarantee it, and you individually are going to be asked to guarantee it. Do your credit report at least once a year. Inspect for errors. Make sure what's there, what's correct. Dispute errors quickly. Like I said earlier, the longer you leave them on there, the harder they get to remove. Send your information directly to the creditor and to the provider of the information. Request that everything gets updated after it's been corrected, and get a new credit report to verify that that happened. Thing to remember about credit is only get what you need, but use what you get. The thing that I see most often where people drive down their credit score and cause themselves problems, you go to a car dealer over a weekend, you may go to 10 different car dealers, and you let every one of them pull a credit report. Inquiry shows up every time you go do that. That's driving your credit score down. A lot of people don't know it, but it does affect it. So get what you need and use what you get. Now, I'm not a big credit card fan at all, but you gotta have one to travel. Book an airline ticket, book a hotel, whatever that may be. So have one, use one, never pay them a penny of interest. You win. You start paying them interest, you lose.
What's the rationale of all these credit reports that drives your score down?
The inquiries, it looks to them, and I'm not going to pretend to know everything that drives a credit score, because it's a complicated monster. But it looks like you're out there trying to get credit every day, or maybe 10 times a day.
So it's perception.
Yeah.
Okay.
And I'm sure they use a formula. I'm sure a computer calculates it all and spits out your score. So if you've had this many inquiries in this amount of time, it's formulating that that's hurting you. It does.
Whether you get it.
Whether you get a loan or not.
Yeah, right. Okay.
No, and getting back to what Chris was talking about, credit cards. I had a customer about 5 or 6 years ago, and this guy was going to do a home equity at his house. He said, my credit cards, his credit score should be about 800. But pulled his bureau, it was 690. And what he had 6 credit cards in his credit bureau file with no balance. He's only used one. But he had 5 open credit cards, which were decimating his credit score. He said, well, I never use those. Why was this doing? I said, well, then close them.
You could use them tomorrow.
Yeah, you could use them
It's
tomorrow.
available.
It's available to you. I said, just pick, if that's the one you're using, is the one you want to use, close these and your credit score will come back up. Yeah. Okay.
Yeah, I mean, anytime you go shopping at the mall, and especially the holiday season coming up, and hey, if you get a card today, we're going to give you a 20% discount today on your purchase. Do you really need that card? Do you really need it? I mean, I happen to use a Southwest Airlines credit card for whatever it is I do to get the points to travel on their points. But
What makes it look like he's a higher risk if you got like the guy with the fire
Right.
credit?
And he had,
If he
like
maxes
$10,000
all
or
of them out.
$15,000 credit limits on each one. Well, what's the scoring mechanism? I'm like Chris, I don't know how it works, but what the scoring mechanism says is you have the potential to go out and spend $50,000 or more on credit cards.
Right.
And that hurts your score.
Now, they say, I haven't seen this one be true, but they say if you have a credit limit and you don't ever use it, never, that can hurt your score. Now, I don't get that, but that's what I'm told.
The worst thing that can hurt your score though with a credit card is when it's pretty much maxed out and stays there. That's the real detrimental piece to the score. Frozen up credit card debt is what really drives the score. That part of the formula is more weighted than having a balance or not having a balance or whatever. But having some stuck, so to speak, is more of an impactor from looking at. And I did a little study on that. But, one thing I wanted to talk about before he left this was disputing. Now, I'm taking the different side here. I'm going to go off the record so that, is this being recorded?
Yes. This can be used against you.
This can be used against me in a court of law. But there are some really ignorant people out there that don't handle the way they report the credit right. I've seen some of these collection agencies and things really trash up somebody's credit, and they just won't respond, or it's just horrible. There is a trick, so to speak, that once in a while is worth doing. If you're coming out of some real problems, you can't even. Say for instance, some credit collection agency has an account from something, you don't even know what it is, and they're out of business. You can't even get a hold of them. You can dispute that item, and if they don't respond to the credit bureau about, here they've disputed and I'm verifying the fact they do owe me, they'll clean that off for you. So if you got something that's like a mess, go ahead and dispute it, and you can get some of it cleaned off. Now, obviously, if you're getting some cleaned off you really owe, that's the side I'm saying. That's not what I'm really trying to get people to do. But I tell you, there's some stuff out there it's hard to get straightened out because you can't even get a live person to talk to, much less get a filing made or an unfiling made. So that disputing can be used to help you or help somebody you're working with to get some of that garbage off of there and get started fresh.
They have 30 days to respond to that.
Yeah, I think it's 30 days. If they don't respond in 30 days, it'd probably come off the credit report.
They have to take it off.
To improve your credit score, pay your loans on time, don't have judgments or tax liens or anything like that little newsletter thing. Comparison shop for your financial services. Keep folder accounts and pay them off monthly. Personal guarantor advantages indicate your support for the business. I talked about a while ago having skin in the game. So if you're looking to get a business loan, you're looking to be a guarantor on that, and have some skin in the game. Helps you establish credit. May ease the startup or cash flow and get you better loan terms if you're willing to guarantee that loan. And one thing I want to talk about while we're on startup costs and that sort of thing. This is Kevin Cook 101. He loves to preach. You're all sitting here in class today. So whether you're talking about jumping into a new business, whether you're in a business now, whatever, the expenses are probably somewhere here because you've invested time, money, effort to get this thing up and going. When income starts, today open the door. Sometime after this, your income starts here. The expenses here. So when's that income going to intersect with the expenses? Kevin Cook 101. That's Death Valley. Right here. This is the part of the business that people don't plan on. what am I gonna do in between the time that I've got this great idea and I start preparing for this business, the expenses start adding up, to the time where I'm making enough money to handle those expenses. Something to think about before one ventures off into the business world. The disadvantages, you may be required to make payments. Absolutely. If the business isn't cutting the mustard and you personally guaranteed it, absolutely you're going to be required to make payments. You may risk losing some assets. Could happen. Spouse may, that's a big word, may be required to sign if you are married and you share assets. And then there's other implications if it's a partnership. We talked about those. Our good friend Ben Franklin, 1748. Remember, credit is money. Still holds true today. Credit is money. 5 key points. Know what's on your personal credit report. Order the free one. Establish a credit history for your small business. Request a copy of your business credit report. Consider providing timely information to credit agencies on how customers repay their debts. Be aware of and follow all laws and industry standards relating to credit reports and avoid costly fines or legal judgments. So, with that, I'll take some questions. If anyone has any questions on credit. And I've got a little handout that gives you some tips on your credit score, what drives it, how to keep it.
Hey, Chris, why don't you just explain a little bit what exactly it means to be a personal guarantor on a debt of a business? Just flat out.
If the business cannot
We need
pay
one more
for-
of those.
Oh, I'm sorry.
You don't need one anyway.
He probably wrote this.
It could have been.
If the business isn't performing as you expected, if Death Valley drags out longer than you anticipated, someone's got to make the payments. Payments got to start. The business can't do it because it's not performing. You personally guaranteed it, and you will be responsible to pay those payments.
Long and short of it.
Anyone else? Any questions?
I'll just comment, in our business, it's not as important for us to get, because we have established vendors. But what we do is get credit reports on people that want to apply for credit in our business. For us, that's the biggie.
People coming to you
Yeah,
wanting
getting
to have
individual
a-
credit reports,
Yeah.
yeah, that's the biggie
Yeah,
for us.
credit reports and that local scandal sheet.
The county,
County
Yeah.
newspaper.
Right.
I mean, that can help you tremendously
could.
if you're the
Yeah.
one issuing the credit.
Right.
Know who's paying what, or who's not.
I think on the other side of the coin too, if you're starting a new business and you, right off the bat, you're gonna have to establish relationships if you're in any type of business where you're going to be buying product. Somebody said they were wholesaling. I think Juanita said she was wholesaling.
Frozen foods.
Okay, when you first start in any business like that, you're gonna have to establish a relationship with that vendor, just like Stokes saying, someone's trying to establish a relationship with him. My experience has been that's pretty tough when you start. As you develop a repayment history with them, those terms get better. You know, first day, you're liable to be, hey, we need a credit card. You don't get any terms. But over time, you may get especially terms where, hey, you know, you get us paid in 60 days, there's no interest, or, you know, there's lots of different ways that your vendors may actually help you when you're starting out, because that is really tough. Trying to have enough cash around to get this product bought and then get it sold so you can pay that back. That is not easy when you're starting a business. And I think that that part of getting credit isn't even something that really gets reported. It's just between you and that vendor most of the time, and how you handle that account. You start getting some more liberal terms. I'm sure Stoke, if you're in that business, you have customers that you totally are willing to give some term, and you have ones they have to pay cash up front. I mean, that's just the business world.
We have one. It all goes back to taking care of credit.
It does.
Yeah. If you take care of credit, you're going to get the better terms.
It's just stacked against the person trying to start, because you don't get to. You would like to think, well, if I'm starting out, it'd be more liberal for me till I get my feet under it. Well, it's just the opposite. It's harder.
Did you have something else?
I was going to say, we have one contractor, and he admits he has trouble handling his money. He'll get a job done, but he'll spend it before he can pay off his bills. So we've had a talk, and he said, you know, I just need to be on a cash basis. And I said, that's good for both of us. It helps you manage your money better because he knows exactly what he has at the end of every job because he's paid it up front. And it helps us because we don't have the risk of losing some money. Yeah, so it's a good relationship.
Yeah, that's.
But I have others that aren't that good.
Well, I think every lender in here, and not because it's so simple, will tell you if you're starting a business, if you walk into their office and say, I need a plan to fix that hole, right there, they are going to really appreciate the forethought that you have in designing some type of a business plan that takes that into effect. Because in America, is it 50% now, or a little over 50% of every business start fails? They fail because of that death valley. That's why they fail. That's where you want to spend your time with your lender when you start, or your vendor, or whoever it is that's going to help you fill that hole. That's where you need to spend your time to get off to the right start. If you don't, it will eat you up, because there's just no way to keep that cash going, and you're working from behind so much that you can't ever get caught up. It's for you guys that have already started a business, I bet you can give your own testimonies to how hard that is. There are very few businesses that start that the product gets paid for that day. You get stuck waiting on, there's a famous saying, I mean, this is probably getting me in trouble again, I'm already in trouble, so what difference does it make? But, we've seen big companies like Walmart almost ruin a small guy that cleans off their parking lot for their snow or something, that they run in and do this thing. It's like, hey, I got 3 Walmart stores to do. I'm going to make $50,000. Yeah, but they may not pay you for 90 days, and you got to put out the gas and the time and the payments on your equipment and everything, and then wait till you get your money. That's Death Valley for many businesses. And I would encourage you that is a place to spend. And when you walk into a lender's office and say, I've got to work at that hole till I get it profitable, they tune in really quick and understand what you're trying to accomplish.
If you address this in your business plan, they're going to jump up and down and have you. Because a lot of people don't take it into consideration.
Well, most people are afraid to say, well, I'm afraid what if I show them I'm going to lose money for a few months? Well, you are.
It's reality.
That's pretty much the way it is.
Face it.
Okay, we're gonna take a break for a little bit. How long do we do that for?
15 minutes.
15 minutes.
So 20 till.
And then you'll be blessed with more Mr. Cook.
Woohoo!
There you go.
Thank you. Final session tonight
Hold into that
is
and
on
you can
succession
say all this
planning.
every time.
Kevin Cook, he's already had been introduced, and I'll just turn it over to you, Kevin. Welcome, sir.
All right, thank you. I will go like a bat out of Joplin if you want me to, or we can take as much time as you need. But I know you have also a drawing at the end as far as an iPad. And I was just telling them it looks really good for the odds on that.
Yeah,
Because
and I'm not in it.
Because like I was saying, the $178 million Powerball, I heard the odds on that, and I can't remember the number. You got a 33% chance if I saw this right on the iPad. That looks pretty good.
No, Rick doesn't know how to count. It's really full.
Oh, really? Okay, all right.
Hey, if you can't keep track of the dollars, then
Good try.
you're not-
I tried. Hey, you know what?
For that.
I'm gonna try.
That's right.
If you can't find that dollar, Rick.
Very good.
Okay,
Dollar for
my part of the presentation is usually, it's kind of a funky thing to talk about. Like, you're here to talk about starting a business, and my portion is talking about selling one or closing it out.
Yeah.
So, and first of all, while that seems odd, when you see this, it says change of ownership of a business through either selling it, closing it, or handing it to a successor. Well, one of the things you can rest on here is I'm going to talk about that portion. And the idea in the presentation is to say, you know what, you really need to think about that when you start. How would you get out? Or how do you want to plan to get out? Another aspect to it, though, is this may give you hints to think about in buying a business. What I talk about today might be little signs that you might say, that's not a bad idea. I might be able to step into something or expand my business by understanding pitfalls and tricks, you might say, to other people getting out of business. Let me give you an example of that right off the bat. I don't know what it is, but it seems like when a family has a business, how many times do you see where the kids don't want anything to do with it? It's not that unnormal. I guess they get burned out, or they had to work at it a lot when they were little, or they just, or for some reason, here will be a nice business, say a family that has it, or a couple, and their kids just don't want anything to do with it. They're gone. Well, maybe that is a great place to attach to. Because if you've got an idea for a new business, or it's associated, that might be a great connection to make with somebody, because most people want their business to go on or hand it over to a successor. They really, it's something they've built, they're really, their life is in it, and then their kids don't want it. And so they're torn. And it opens an opportunity today for people to find those little special niches of saying, if I connected right, and if I'm a great manager, or if I can learn to be a great manager from the owner, I either have the opportunity to succeed and be the manager for him, or perhaps he even works out a deal where I get to buy him out over a period of time. This is not a bad theory. So even though you might say, I'm not even into business yet, and you're talking about selling, pay attention to the facts that I'm going to throw out here, and it may lead to opportunities not only to get into business, but to expand by acquiring. Let's say you started this, you may be able to acquire this and really make it quite an impactful process. The last thing we're going to talk about, and you'll be happy that you're here tonight, is thinking about, in the beginning, a strategy for retirement. Now, most people that are in your position of starting a business will ignore that in the beginning. Okay, when I get going good enough, I'll start thinking about that kind of thing. But there are certain tools afforded to people that are self-employed for retirement, much like there are for people that are employed by someone else. Ways to establish IRAs and KEOs and SEPs and things that are very attractive, tax-saving things for self-employed people. You're not left out of the 401k world. There are opportunities for you, just like there are in the working sector. So we're going to talk about all that. I'm going to go fairly quick, but just as Chris said, stop me, raise your hand, whatever, if you have a question, because it really is meant to be that way. All right, I got to try this. Oh, that's so cool. All right, there is a pretest in this, says, what do you know? I'm going to read these pretest questions because this is what we're trying to learn in this session. It says, which of the following are reasons to sell your business? Then it said, select all that apply. Well, I'm going to give you the answers here since you don't have the pretest. Some people get a new job offer, market or industry changes on them, or someone offers to buy their business, or they're ready to retire. Question number 2. Most businesses' valuation methods are a combination of 2 things. How you value your business, if you're going to sell it, is a combination of 2 things. Now, all lenders in this room do not get to answer this. You probably couldn't get it right anyway. But what do you think the 2 things are? Throw out just, if you're going to buy or sell a business, what do you think the 2 things are that someone would look at to say, well, I'll give you this much for it because of one of these 2 things? Just take a guess.
Credit.
What was it?
Credit score.
Nope.
Reputation.
Good guess. Nope.
Reputation.
2 things.
Profit. Customer base.
Profit is one. Profit is one. The cash flow or the revenue stream of a business is one thing that will help people in selling their business. What's the other one?
Debt.
Huh?
The debt.
Well, it's actually almost that. It's really the assets. It's the assets minus the debt, what it's worth. Okay? Those 2 things make up the things that tell someone what a business is worth. We're going to talk about that even more. When selling your business, it is important to know both the buyer's financial ability and the buyer's management skills. True or false? That's true, obviously. And you'll see in a little bit that trying to hand the business over to somebody is different than selling it to someone. Trying to get somebody to take over and plan like you're going to own the business, but you'll have a manager as you retire. That's a lot different than just selling out to somebody. We'll talk about that. Succession planning deals with the process of passing the control of the business to someone else. That's what succession planning is about. And lastly, small business retirement plans are not recognized by the Internal Revenue Service. I've already given you a hint. That is false. Self-employed people have a great opportunity to set up their own retirement plans, just like people that are employed by some big firm. All right, so let's start diving into this. Why sell a business? These are the things that usually come up. Sometimes you just get a job offer and you've been in business and you're sick of it. Or somebody comes along and you've been starving along, barely making it, and they're saying, hey, here's this great job offer, you're good at this skill, but I'll hire you. That's a great reason to sell out. A promising offer to buy your business. If you've done a really good job, there are so many times that people are today getting on the internet and starting I saw a kid, I bet he wasn't 10 years old, who had started some kind of a deal on the internet, and a big company, I mean, he was just smart. A big company's buying, I forget what it was, $10 million or something. I mean, he was a little kid, but he was, junior high. But he had thought of something, I can't even remember what it was, because I was thinking, dang, I could have done that. Did that happen to you? You're always like, I could have done that, I could have thought of that. Sales and profits are not enough to meet your needs. And as sad as that sounds, that's not uncommon. Sometimes it's really a good deal, but you're working yourself to death and it's just not making enough to meet your needs. And so there's a reason to get out. Market or industry changes. Anybody give me an idea of what would be a good example of that? I'll give you one. 25 years ago, this was really a neat product. It was called a Walkman. Remember? Has anybody even got one in the garage anymore? Probably in the garage somewhere in a box. It was a great idea. But the industry changed, and Walkmans were so cool. But the industry changed, and that product just went away. I mean, it just became obsolete with all the new iPods and iPads and everything else. You can just plug in and do your own radio station on Pandora. But Walkmans were a cool thing for a little while.
Well, one I think of is Kodak. They didn't change with digital, go to digital cameras.
That's right.
They didn't change.
You know,
Gone.
we had the old, at the bank, the regular Polaroids for I don't know how long. And then when the digital came, those things were so cool when digital cameras came out that, you know, if they would have been ahead of the game. Lots of things, I could take to, there's probably 100 things we could come up with where the industry didn't change. And they just had to get out of business. They got swallowed up. Here are personal reasons to retire or get out. That you're ready to retire. Some people just get to the point and say, hey, that's enough. I'm going to do something else. Burned out. Now I love to talk about this one. You're going into business for yourself. What statistically do you think in America is the number of hours the average self-employed person works when they start their business? Per week?
70 hours.
Close. 80 hours. 80 hours is the average work week for a self-employed person to start their own business in this country today. Hey, if you think you're going into business because it's just, well, I don't want to listen to that boss anymore, I'll just do it myself. Make sure you're prepared to work twice as much. Because it is hard work. Now, it's gratifying hard work, but it's not a coast. It is a substantial hourly commitment. Personal issues such as health or family needs. I mean, how many people have had to take care of a parent or something and it just changes your life?
These days, health insurance might be.
Health insurance is a biggie. If I see lots of people that they can't retire because they're in that gap between for that health insurance, and it's a backbreaker until they can get that worked out where they're on Medicare, and it's just doesn't. They can't stop. Desire to go in a new direction, that's obvious. That happens to us. Okay. Hey, it didn't do nothing. Oh. All right. First of all, here's what happens if you're going to sell your business. The first thing you're going to have to do is decide or understand if it is sellable. That's one of my favorite. Every lender in here is going to cringe at this topic, and your eyes are going to blink a little bit too. I cannot tell you how many times I have sat in my office and had someone come in and they're wanting to buy somebody's business. And we always say the same thing. Bring us 1, 2, 3 years of tax returns. That's what we're interested in. We want to see how much money that business is making. And I can't tell you how many times someone said to me, well, the tax returns don't show any profit. But it's because, the guy says he just doesn't show everything or whatever. That's all fine and dandy if that's the way they want to do business, but run away from that deal. If that thing doesn't make any money, you don't need to be buying it. Why would you want to? If it can't turn a profit, it's one of those two factors. I did this in Deloge not too long ago, this class, and there was a guy in there, and he was a good guy. He was really just trying to get started. He said, what do I have to do so the government doesn't see anything that I make? That was his question on this part. And I said, well, I can't answer that, but that's not the point, because if you're going to sell your business, you want that thing to look as strong as it can. You want that profit at the highest level. And these guys in here that do loans, I'm telling you, they can get somewhere with something that shows a profit. They're stuck when you bring them 3 years of tax returns and the thing's never made any money. And you're trying to buy it from some guy because he didn't do all the things right.
Some people ask, why 3 years? Why 3 years tax return? So from year 1 to year 2, something happened. It either went up or it went down, right? But you get year 3, and now you got to trim it. Did it continue to go up or continue to go down? What did it do?
Yeah, and there are certain tax things that do happen in 1 year that might affect something for just 1 year that by the time you get 2 or 3, that will level out.
Yeah.
Very good point. All right, is your business in an attractive industry? Okay, we already kind of covered that. If you're trying to buy a guy's business that makes Walkmans, don't do it. Okay, I'll just go out on a limb and tell you don't do it. Determine potential buyers. Are there really potential buyers for this business that's being sold? Or is it such a unique thing that only the person doing it could ever do it? You know what I'm saying? Like they're the only person that's ever figured this out, and you're going to buy it, it's probably going to be a noose around your neck. Make sure that there's good assets. We see this all the time, and I don't know, I guess it's just typical, but people tend to let the assets go down prior to selling the business. And if they got rolling stock, it's like, I could trade up and get that truck. It'll probably make it another year, so it's got 200,000 miles on it, the delivery truck that they're buying. I did a deal with a guy, and it was really a close friend of mine. He bought a wrecker service. And he bought it from a guy that was really a good friend of his. Every one of those wreckers was wore out. And the guy was saying, well, I've kept them all up in shape, and yeah, they got a lot of miles on them, but don't worry, he replaced all those in the first 3 years. It nearly broke his back because the assets were that depleted down. That's a really important issue if you're going to buy a business or if you're selling it. Keep your assets up. Quality inventory. We can take you through 100 examples where people let the inventory get stale, or that's the non-saleable thing on the shelf. You go in and buy that and you're stuck with the product that didn't move off the shelves. My wife had a bookstore and she didn't buy anybody out, but there was a company that wanted her to buy out, and I looked at the inventory. Everything in there was stuff that good salesmen had kind of thrown together and got the people to buy on a special deal. And about half of it was good to sell, and the other half was stale, terrible inventory. Well, that's all that was left there to buy. It was almost worthless. Make sure the inventory, your inventory is quality, and make sure that if you're buying, that's something to really check. Again, this item, transferring to another person, we're going to talk about a little bit more. That is the hardest thing, turning over control to another person, but really maybe not getting out. We're going to talk about that in succession later. And having a healthy balance sheet. If you add up, this is what Stoke was talking about. If you add up the assets to a company, let's say they told $100,000, and then you look at what the people owe, and they owe 95, I mean, you got to think about what has happened in that business that's left it in that position that you're going to buy out. I mean, if that's been in 20 years and it's got to there, I'd be asking myself, something's wrong. Something's not healthy about that. All right, determine your price. I love this part. Okay, how do you determine the price of a business if you're going to sell it, or how would you determine it if you're going to buy it? Let's talk about that. Who said profit? Kevin, did you say profit? Good. What would you think is fair? How would you look at a profit in valuing a business? Now, there's not a perfect answer to this, and I'll let the credit guys get in on this because we all have different rules. I'm going to use one that that one of my board of directors always uses this for determining a price of something. He uses one of two factors. He says, whatever the business profits per month, he looks at as 1% of the value. So if it profits $1,000 a month profit, then he would say that business is worth no more than $100,000. Does that make sense? How I'm saying it? Now, that doesn't mean that the business is for sure worth that till you really measure, but it's a quick analysis. If something is making $1,000 and the person says, I want $500,000 for this business, the alarm should go off. Wait a minute, $500,000 to buy this business and it only makes $1,000. That would be something to tell you right off the bat, it's not lining up. Now there might be a reason it doesn't line up, but that would be something to really tie into. How about rental houses? I love to talk about how to value that. Let's say you got a rental house that brings in $400 a month. Now let's use the 1% rule. What would that be? What would you say that rental house business, now forget what it appraises for, I'm talking about just the income flow. What would you say on the 1% rule that you would give for a rental house that gives you $400 a month? What'd you say? 40,000.
Right.
40,000. You would not exceed 40,000 investing for something to give you back 400 a month. Is it kind of, you see what I'm getting at? This is not to say, this is just a way, like a test. If someone's pricing the business, I like to have something to measure against, because how do you have a way to think about it even? Okay, let's take another approach. Some businesses will say they want so many times the earnings. This is not uncommon, is it? I mean, you've probably seen this many times. So let's say a business makes $25,000 a year and the guy wants to sell it. What, just throw out anything you would think might be a way. How much times 25,000 would you think is a fair way to price a business? There's no right answer here, just give me a thought. Come on, you're making it hard on me. 3 times, okay, that's nothing wrong with that thought process. So what Kevin is saying, if it made 25,000, I would give you 75,000 for it. And there's nothing wrong with that. I find most people will say 5 is a good round number. 125,000 would be the most I'd want to pay for something that's going to give me back 25,000 a year. One of the reasons I say that is that people that are pretty astute in investing, they look at it like this. If I'm going to invest 125,000, I'll get my money back in 5 years. That sounds pretty short, but if you're comparing out there in the world what's available, there are other things to do with your money if it's not going to come back to you very fast. So it's just a number. I've seen up to 10 times. People wanting 10 times what it makes per month. I mean, makes per year. The 1% is figured on monthly. the times is usually figured on annually. Okay, does that make sense to everybody? Does that give you a little bit of a perspective? All right.
And they're not too far off, because if you divide 12 into 100, you're about 7. So 5,
Yeah.
7. That's
7 years is real common. 5 years is for aggressive investors. People that don't borrow, that just have money laying in the bank, they look at it and say, I'm not making anything on this. If I put it into this, I could get my money back in 5 years. They're pretty aggressive and want a pretty fast return. You're in that world. Am I way off on that?
No.
That's pretty much what I see. It gets out a little longer if you're borrowing. If you have to borrow to buy the business, you've got to figure it out a little longer because you're paying interest. And the investor buying it is just saying, oh, I was making nothing on a CD. I'm going to put it in this and I'm making $25,000. Big difference. All right, here's the other way to sell the business. Valuing the assets. Okay, so you got this business for sale. You start adding it up. Oh, they got some cash in the bank. They got receivables. They got inventory. They got some equipment. And they got some real estate. I added all up and it totaled $500,000. So that's how it might be priced. This is what all the stuff added up. I would never buy a business based on what it was just adding up to be, unless I was in business similar to it and I was just pulling this into my business. But why give anything for this if it doesn't make any money? And then these guys that are in the business, when they come in, and it's frustrating to borrowers that come in and they're not used to this, because they're hung on, the person there said, this is the nicest building I've ever seen. I mean, you could eat off the floor. It's worth, I bet it's worth $200,000. He only wants $150,000. And the bankers in there saying, yeah, but how much money did it make? And it's almost frustrating to them, but in selling a business, it's got to be part of this. Preparing for the sale. Resolve, if you're going to sell your business, resolve problems first. Don't think the guy wants to buy your business and have a bunch of issues out there. And what I mean by issues, if you got a pending suit of some sort, you got to get that cleaned up before you're going to try to get this over to somebody else. Accounts receivable that can be collected. We use kind of a standard thing of 90 days. If you got a receivable that's been out there for more than 90 days, a pretty good chance the guy buying is going to value it at zero. I mean, that's getting pretty standard. The only time I don't do that is there are some government contracts, you don't get paid any faster than 90 days. And if those are the cases, then there might be a reason to value that receivable if it was out there longer. Prepare financial statements so people can see them. If you're going to sell your business to somebody, you shouldn't be embarrassed to show them what your business is worth. Provide a business plan. If somebody's trying to buy your business, help them. Help them with a business plan. They shouldn't need this issue as bad if they're buying a business that's already going. But they may need some help in understanding how to grow the business or what kind of cash is needed. You may have a ton of cash in the bank, they may not, so they may have to plan for that. Secure relationships. I was talking about your wholesale business. If you were selling it and you got this great vendor out there who works with you perfectly on food, they may not feel the same way about the new buyer. So you need to secure that and make sure that the person that's buying the business doesn't say, hey, I bought the business, now that guy won't give me terms or won't help me or whatever. That's a good thing to do to help the buyer. Sell off the old inventory, I've already covered that. Office equipment in good shape. That seems so basic, but it's a terribly neglected thing. The people go in there and the computer is shot, the copier doesn't work, the office chair hurts your back. I mean, it's just not good. I mean, clean it up, neaten it up. If you're going to sell it, it needs to be a top working order. And then how will you get compensated? There are two factors here. One, are you going to just get a check, or are you going to get payments? How many people would be scared of taking payments? most of us would be scared to take payments. How many people, if you were buying, would actually want the guy to take payments? Probably all of us raise our hand for that. So you can see it's a seesaw. Depends on which end you're on. If you're selling out, you just want to check and leave. But that's not always practical. Sometimes you've got to be willing to help in the financing to help it get sold. Look for prospective buyers. Where do they come from? The number one place is employees. Most employers will have many times a good employee. They already understand the business, and they're a great place to look to sell your business to. Here's the second thing. That's a great place for you if you're an employee to buy from. Again, the kids aren't wanting it. You're a great employee of that person. They may take you under their wing and let you come on board and actually buy a business that way. It's not uncommon. Customers. Now that kind of blows your mind, but a customer of yours that uses your product may be a great person to sell your business to. I mean, they're thinking there, you know, if I own the business, I'm going to get it wholesale.
That's one of my selling techniques, because this is for me, this particular thing. But a customer will say, you can't go out of business, how will I get blah, 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 whatever. I said, well, you can buy the store, you can have it anytime.
You can do it, and you can buy it wholesale then. Great sales, that's a great sales step.
It doesn't always work.
It doesn't always work, but it's a good shot.
Opening the door a bit, yeah.
It opens discussion.
Yeah.
Business owners. Now this one's kind of, people that are in business tend to want to be in business in multiple ways. And I can't always figure that out because I can't hardly take care of my own stuff. But you know, you run into people that can handle 6 or 7 different businesses. I mean, that's crazy, isn't it? It's in their blood. Entrepreneurial spirit is a good word. If it's in there, if you've got a successful business, other business owners are a pretty good place. They're attracted to a successful business.
It's just like diversifying your investment portfolio. You're also diversifying your income flow, because if this one is up here, this one falls, you got some things to equal it out.
Yeah, or like if I owned a grocery store, maybe I want your frozen food thing because now I've just got another layer, what they call integration. So business owners are good. Competitors, don't leave that out. Somebody that you fight against every day may be the very best person to sell your business to. Let me say, hey, I'll just take them out. They've been a thorn in my side. They've gotten business from me, and what? Oh, good. I'll just buy them out. Not a bad theory. Okay, negotiating the deal, qualifying your buyer. Obviously, if someone wants to buy your business, it's not a bad idea to really sit down and talk to them truthfully about their credit, about their cash. I mean, do they really have the ability to do this? Before you just spend hours and headache and your price, you put your price out there, you do all this stuff, when they didn't really have a chance. I mean, it's good to try to figure out if they're doable. Lump sum versus installments. All right, let's go back to that real quick. Some businesses are so non-fixed assets that you carrying the financing is about the only way. And let's think of something subscription type. Let's say that you've got a business where you do the servicing on something. So you got 100 people that have you come and do the servicing on their furnace every month, and it brings in $20,000 a month. Okay, what are you going to sell the guy that wants your business? What is he getting?
A customer list.
A customer list. That's all he's getting. Now, if you carry the customer list into Rick and say, Rick, this guy he's making $20,000 a month. So on the 1% rule, where are we at? $200,000 he wants. And Rick said, okay, I might do that. What do we got to borrow against? I got this list of 100 names.
2 million.
Huh?
It's not 200, it's 2 million.
It's 2 million. I was thinking, but these guys are not sharp, so that. Yeah, you know, I was about to say 2 million and said 200,000. Oh, I don't want to embarrass them, but you did so good. Now, here's the thing: you're in there saying, "I need $2 million," and I got this list, 100 people. Rick is gonna have to go to the restroom before he can come back out and talk to you, because it doesn't make any sense. You're gonna have to finance that. If you're selling that kind of business, you're gonna have to finance that and take payments, and you're gonna have a hard time getting that done with the bank, because there's not something to hand them, and that's our nature, is what are we loaning against. There are some banks that do that. Charter Communications, say that business. It's just customer list. Well, they may have a few towers and that kind of thing, but they're basically, if they go to borrow money, and they borrow a lot of money, it's on the customer list. It's on that revenue stream.
How can you sell that though when they can always opt to go somewhere else?
Oh, you are so, I want to hire you. Loan officer for me. That is just brilliant that you would think like that right off the bat, because the only way is if they have real solid contracts. It's like, okay, for the next 2 years, you're signed up and you're guaranteed to pay $1,000 every month or something. That's a true contract that you would look at and say, oh, good, I actually do have something to hold on to. Because I'm going to come to something else in a minute that you're just segued into. Because if you're only there and you're brand new at it, if you don't do quite as good and they go down the street, poor Rick only has a list of now 10 people. He thought he had 100. Now he's got 10. The whole thing's going downhill in a hurry. That's a great question. All right, where was I? Oh yeah, I'm down to that. Now we're to the part that you just segued into. That was so perfect. I like set that up. I wanted you guys to know that was something we had set up. What do you think this means? Lisa, you're going to have to answer that since you came up with the thing. A non-compete clause.
Oh, that they have to stay with you and they can't, they've signed on to stay with you and they're gonna stay with you.
Oh, that's so close, but it's not right. You're so close. You're so close. You almost had it. Here's what it
Oh,
says.
that they can't open a place?
Yes!
Okay.
You're nailing it. You're nailing it. Okay, what it says is, the guy that sold out the 100 list, if you don't get one of these, and he says after about a month, you know what, I missed the $20,000. I'm just going to open back up. Well, what's the first thing that's going to happen? He's got the relationship with the 100 people. They already like him. He's going to take all your business and you're going to be dead. If you're buying that kind of business, you should always require a non-compete clause that says, hey, at least for the next 5 years or maybe within 100 miles or something. You guys have probably seen or heard of those.
That's how Barney's, it was a franchise when I bought into it. And there was 15 different stores.
Uh-huh.
But the original owner, Barney, that's the name, went around in a truck, similar to a Swan truck, and delivered. But he had to stay 15 miles away from whatever town
That one of those was located in?
Yeah.
Perfect. This is a brilliant piece of business legislation that's out there, because you just can't afford to buy someone's business and then have them back in business shortly, wiping yours out. And you should be prepared to do that also. You should be prepared to sign one if you're going to sell to somebody. It's only fair.
I know that in the instances of my salesmen, if they go from one company to another, they cannot go back to the customer they worked on. They can go in and say, hi, I miss you, blah, blah, blah,
But they can't be selling to
they
them.
can't be selling. Yeah.
We have that sometimes in our lenders. We say, hey, if you leave us, you can't go into a lending job somewhere else within a certain radius or whatever.
Time and distance.
Time and distance is usually what it is. Management assistance. Okay. It's not uncommon for someone who sells a business, or if you're the seller, to have to stay on and help out for a while. Either in a consulting basis, or maybe you just have to teach them. All right, I want to, do you think that's good or bad, generally? It's good for that new buyer. How hard is that on the seller? It's pretty rough.
One of the, I'll never forget this, swing away can openers.
Yeah, down in Montana, we have that swing away plant.
They had one downtown with you guys.
Yep, and we have one in Montana.
And he started it, did everything, and then when he died, his wife took it over, did one thing to do with the plating part, so she outsourced that to local platers. But eventually that was taken away from us and they sold it to China. And the last month, they had the Chinese come in and they were showing them how to do their jobs. And I can't imagine how hard that was for those workers. No, they were going to be out of the job.
Yeah, I need to show you this so you can take my job.
Yeah.
Well, what I find too is that you've put your heart and soul into a business. Let's take your lumberyard for a minute. You put your heart and soul into it, blood, sweat, tears. You develop it up to something. You sell it to somebody. You agree to stay on for 6 months to help them learn the ropes. And the first day you come in, the first thing they says, I don't want to do it like that. I'm going to do this. Like, I hate your office chair. I'm going to put mine in there, and I want to. That is real hard for a business owner to watch all that change. And even on some of it thinking, that's not the right decision, but they realize, I don't own it anymore. So while it's a really good thing in one way, it can be really hard. Great example too. Down payments. Many times, if you're going to sell business and it's one of those 100 lists, you got to get some cash from that deal. You got to get some money up front. If you're not, if they're going to have the chance to run the business down, you need some cash. Collateral. Sometimes, if I was doing that 100 business list that I talked about, you know, you might, as the seller, say, hey, I'll do this for you, I'll carry the loan. But I'm going to need a lien on your house. And you may need some collateral like a bank would if you're going to carry the financing. It's not a crazy thing to ask. All right, we're moving through. Where are we on time? We doing good? Okay. Closing a business. Now, that was selling a business. This is closing a business. Steps for closing a business. Follow the instructions in the founding documents. Man, I saw a real mess, and I really learned a lesson on this with an LLC. The people closed out their business and canceled their corporate papers, and then realized there was some stuff that still needed to be done. They got some, income or something else to sell, and they had already closed their corporation up. Oh, what a mess. One of them did that and still had the property to sell. It just didn't fathom what they were doing. They had to go back in and reopen that corporation to be able to get that building sold. So one of the things you need to do is, if you do an LLC, there will be steps in there of how you close the business out. What things that you're going to be required to do. Make sure you follow those. If you're a corporation, maybe a partnership, not if you're an individual, it doesn't matter. You're in control and you own everything. But if you're any of those others, check those documents before you just start closing things out. So, oh, well, I closed my corporation, I don't need it anymore. And then find out you do need it, and it's a real mess to get that all opened back up. Selling the business, these are the steps to do. Then you follow instructions, you sell the assets, you cancel all the permits, fees, leases that are involved in your business. Then you comply with the federal income tax laws, resolve any outstanding issues with customers and creditors, keep your records, and above all, get some professional help. If you're closing your business, an attorney and an accountant, I wouldn't even start it until I had some advice from them so you don't mess up. How about succession? Now this is kind of a fun topic. This is where you plan for someone to either own or run your business after you retire. Now, this is the part that I know is weird if you're sitting in here and you think about opening a business, like, I'm thinking about succession. It's still a good topic. Because if you're thinking that your children are going to take this over, that's a real good thing to start in the way you design the business, the way you set it up, the way your corporate papers are made. If that's what you're trying to accomplish when you start, then design it as such. Now, here's some important parts about succession planning. Start early. Don't wait down to the time to start handing it over to someone and think, man, we got to get that figured out. Start early. Talk to people. Figure out, if you're going to do this, what the implications are. There are some gift taxes that you need to consider. You get a really big business, you think, well, I'll just give that over to my kids. Well, that may or may not be the best thing from a tax standpoint. There may be issues there. So start early and get help on that. Identify who the successors are going to be and train them. How many times have you noticed where children took over a business and it was never the same as when mom and dad ran it? I'm going to say probably 75% of the time it's pretty tough. There are some people that turn it over and then they keep such a finger on their kids that it goes pretty good. But I've seen so many times they sold the business, they wandered off to Florida and they're living the good life, and then they're back because it's a fouled up mess. So train the successors. Plan for the tax exposure and get legal advice. There are tax considerations to just handing your business over to your family or to anyone. Okay, we're doing good? All right. I'm glad you're here for this. Let's talk about retirement. Yeah, I gotta catch up here a little bit. I'm way behind. Okay. Let's talk about.
Do you have the sheets to follow?
Huh?
Do you have the sheets to follow?
Oh, did I not give those out? No wonder you guys look lost. You're just looking at me like. This might help you a little bit. This might help you a little bit. I'm gonna start over now.
I got mine written down.
Good job. I know you were writing a lot of notes. I was like, man, she's an attentive people. Well, no wonder you didn't have anything to look at.
Do you have some more? Oh, you don't.
What an idiot statue.
Giant human brain.
Yeah.
We got it, we got it.
There's one. Okay, got it? We good? All right. Catch up to me where it says planning retirement.
This is the same one.
Yeah, that's the same one we had before.
Yeah, it's the other one.
Here we go.
There we go.
That's why you didn't have it.
You mean I don't have to write anymore?
No.
I had it all going too.
I just thought you guys were like, man, they're just paying so much attention, no wonder you didn't have anything to look at. Nothing to write on. Pass those around.
Thank you.
Do what? Yeah, Dumb and Dumber. Dumb and Dumber us.
Next week.
All
I
right,
don't have to write anymore.
now you got it? Flip back to planning retirement.
Page 7.
I might have Martha come up, what page is it?
7.
7, okay. Now look back at all those slides and see if I did a good job. Did I nail it? Okay, good. Good, all right, planning retirement. Now, all right, that threw me off. I think that probably this topic is one of the best ones for ending the thing on, because I know what you're sitting here thinking is, I think retirement, I haven't even got started yet. But Martha will tell you right off the bat, that people that wait tend to never get it going. And people that start in the beginning usually are very successful in handling a retirement issue. So One of the things I will tell you is that when you start your business, think right off the bat that this is an important factor that you need to work into your business. You may say, yeah, but wait a minute, I'm in Death Valley. How do I put away? Put away $50. Just start the process. Go into someone like Martha, and they do a great job. I have one of the FSFM representatives in my branch too, and they do a great job of sitting down when you're not sure about some of this and showing you some great little techniques we're going to talk about. There is just so many self-employed people that don't realize that some of these tax advantages are as open and available to them as they are to large companies or anything else. What I tend to find is that when a person starts a business, they tend to look at things like, well, to save tax dollars, I'm going to buy a new truck, or I'm going to buy this, or I'm going to buy that, because then I can just deduct that off my taxes, and that's how I'll save tax dollars. Well, I'm not saying that's bad, because if you really need something, great. You should do that. But there are ways through the investment program to save your money, lower your tax liability, and still have the cash, as opposed to just like going out saying, you know what, I need a new skid steer loader for my business, so I'm going to go out and buy it, and I'll be able to take it off my taxes, and that's how I'm going to lower my tax liability. Well, most people that do that tend to do it by borrowing money. So now what happens? They went out and they got a 5-year loan for the skid steer loader and saved taxes this year. But they got the payments for 5 more years. Now that might be fine, but how much smarter to have created a self-employed savings for retirement and lower your tax liability and still have the cash. So I would say that 90% of the people I talk to will buy something to save tax dollars before they'll do retirement planning. And that's not the best thought process. Think about this issue. They're tax deductible, first of all. Assets in your plan grow tax free. Most of you have been hired by somebody else where you had some kind of a savings plan, so you know how that works. You don't pay taxes on it. Like if you're doing an IRA, you know, it's going into the fund and then it's not being taxed. And then when it comes out at retirement, now Roth IRA isn't like that, so I'm messing up a little bit. But if you're, you know, when you hit 65, you decide to retire, then all those built up things will be what you're starting to be taxed on. So it's a way to not pay taxes at the time you pay them. Flexible plan options are available. There are so many little creative ways to do these kind of investments. And someone like Martha, I'm not the expert on that for sure, but someone like Martha can start you out knowing. A retirement plan can attract and retain better employees, reducing new employee training costs. Now, you are sitting there thinking, I don't even have employees yet. But simple IRA plans, I find that to be a wonderful way. I'll give you a good example. I got a business that I work with that does dentistry work for underprivileged children. And their employees work really hard because they just are swarmed with kids all day long. It's hard work. And they were a new business, and they went through their first year and they were doing okay. And we went in, and Lisa, her counterpart, set up the simple IRA plan so those employees, and they were relatively small things, but they could start contributing to an IRA. And they only had 3 employees. So don't be thinking you can't do that in a small business. I mean, it was like night and day. Oh my gosh, I have a retirement program. Now, this is the kind of thing that can help retain an employee, because what is one thing employees look for today? Benefits. So it's really hard as a small business to have a lot of benefits. It's very difficult for you to provide a lot of benefits. But this is one that really works and really is a low cost to you to get set up. And if you set one up, then you can do it yourself. I'm not saying that wrong, am I?
No, no.
Theoretically, that if they're going to do them for their employees, then they're eligible to contribute also.
Right.
All right, employee benefits. For the employee, they can reduce their taxable income by putting the same theory we just talked about. And again, theirs isn't taxed till it's distributed. It's an easy to make payroll deductions. We do this at our bank. That can just be automatically taken out of the employee's payroll. And can be set up automatically. Obviously, compounding interest I'd like to really talk about, but as low as interest rates are, it just really makes everybody sick to talk about. You know, it's like used to we'd say, well, you know, if you're making 7%, your money will double in 10 years. If you're making 0.07%, I'm not even sure. Why don't you guys calculate that? You did so well in the 2 million. It's really difficult. Let's see. Retirement assets can be carried from one employer to another. That's just simply saying if they're doing an IRA and something changes, they can actually move it. They're not bound. Opportunity to improve financial security in retirement. That's an obvious statement. All right. Here are the 3 types of common retirement plans that are affordable or available to you as small business. A SEP. Oh my gosh, I touched the screen. Go back, Gary. The SELF is a self-employed plan. The simple is the simple IRA, and the 401k is what it is, a 401k. So let's talk about them just a little bit. In fact, Martha, I'm just going to call on, can you kind of give a little more than I would depth on a SEP?
Yeah, a SEP account is a really nice plan that an individual business person can open a SEP. It's a self-directed account. It's basically going to be just like a traditional IRA account. The difference is that the owner of the business can put up to 25% of their annual compensation in that plan. So it's a good way to pack some money away as the business owner, and everything that goes into that plan, you know, is you can use that as a deduction on your on the tax side. So you know, that's a real nice
25% is huge too.
Yes, it is.
And you start thinking about if you've got a business and you're making $100 grand and you can put $25,000 into a SEP and not pay taxes on it, that is a big number, a big advantage.
Now,
all right.
Let me just kind of point out there, the taxes on that will eventually have to be paid. But you'll pay taxes on that as you take some money out of it. Because when you retire, you're not going to take it all out at once, because then you'd have to pay taxes all at once the year that you did that. So it's going to grow tax deferred, and then when you start taking the income at retirement, then you pay taxes on what you take out.
All right, now let's talk about simple IRAs. Now, we just kind of covered that a few minutes ago. But the simple IRA, is it up to $6,000? Am I thinking right? Or has that changed? $6,000 per?
It's 3% that the employer puts in, and the I haven't done one of those in a little while. So
Well, no, I'm
I
not.
brush up on that. I don't do a lot of those.
I was thinking there was a 6,000 limit besides, but I may be wrong with that. But for the employee,
Yeah.
this is really a sweet deal to give them the opportunity to pay into an IRA and then allow yourself to be able to put into the IRA. Not as big in numbers as we're talking about with a SEP, but still an effective retirement plan. The last one is a 401k. Most small businesses don't think that's something that they can really work out, but they can. Now, what's the aspect to a 401k that, has anybody ever had one where you worked? You have? One of the things, it depends on your employer, but many times the business will contribute a portion of, like if you put in, 5% of your money, they may put in 2% match. They'll call it the matching portion. Well, you have to look at that because that is a huge return right off the bat. That's kind of free money. It has to be left in there a while before you get it, what they call vesting. But that aspect is available to even a small business to work with. You have to work with someone like Martha to get it all straightened out. But let me tell you, employees are really attracted to things like that. That's really a cool benefit for them. And it's really not a horribly expensive one for the business owner.
The 401ks have come a long way. They used to be only available to larger companies. Now, smaller business owners can have owner K, 401k plans, and they might have, but just a couple employees. But they've really come a long ways with that.
As well as case stops, right?
Yeah, there's some more offshoots to this than what is covered in this, and I don't even understand them all myself. But that's the beauty of what advisors are for, is to sit down with somebody. But I want to emphasize over and over, think about this as you start. Most people are like, well, when I'm really making some money, that would make sense. That is not the way it works. I mean, we can do a little, these guys, a couple of giant calculators like them, can sit down and take a 20-year-old and just say, well, if they put $50 a week away or a month away for 40 years till they retire, and just that turns into huge dollars. It's just that most of us have not done that in our life. We've waited, or there's always, when you first get married, what do? You got to buy a washer and dryer or something. I mean, seriously, there's just basic life you take care of, and we don't do those things. And the same way with the business. Don't neglect that. Go home tonight and say, you know what? That didn't make any sense. I wasn't even thinking about that, but I'm going to put that on the list. I'm going to talk about retirement tomorrow. Okay, 3 points. Planning for the possibility of selling a business, we covered. Closing a business, we covered. Making plans as soon as possible, not waiting. And creating a retirement plan for you and your employees. All key points from the presentation. What you learned about. The reason, this is just covering back. Reasons for selling and closing a business you learned about. Steps for selling and closing a business. Steps for getting succession plans in place. And the benefits and steps for creating a retirement plan. Questions? I know you want to get to the drawing, so you're not going to ask questions. And if I would have given you the material, you probably had more questions, right?
No.
And Lisa,
No.
you get the prize for the brilliant question of the night. All right, Rick, you're back. You're up.
Thank you, Kevin. Let's give him a hand. Before we have our drawing, this is helps us do a better job as we put these on. This is a satisfaction survey. You don't want to have to put your name on it. If you would, for us, just fill this out and as honestly as you can, as you wish to, and just leave it with us. You just maybe leave it on the table on your way out. That would be wonderful. And any suggestions, anything that you can have to help us make this course better. Like I said, we have 46 branches throughout the southeast Missouri and central Missouri, and we plan to take this show on the road. And
We've been hitting the junior college circuit. We've been to Mac, Three Rivers, now Jeffco, and I think Mobley's in the plan.
East Central. You've been to East Central.
East Central, yeah.
So we're the show is on the road, but anything we can do to make it better, your input is invaluable. That would help us make that better. We've given you a lot of material in the last 5 weeks. We appreciate your attention. And like I said, First State Community Bank, like I said, this is how we give back to the community. We feel it's an investment in our communities, not just coming up and doing a presentation and you taking it and giving up your nights with your families to be with us. You know, we felt pretty honored and special that you would do that for us. We do have a drawing that we want to make tonight. If my records are correct, what we have tonight, we have 3 people that are available that attended all the sessions. But before that, you know, I keep putting that off. We do, you know, it is graduation night, and we have a certificate for you of completion for completing the class. And if our guest would help me hand these out. Lisa Ball, this is your certificate of completion. Congratulations.
Thank you.
Next, we have Kevin Cox. Kevin, would you deliver to Kevin?
Thank you very much.
Yeah. And we have Allison Dearder.
We need that music for
Fonda's not with us tonight. Her business is a chiropractic, doctor of chiropractic, and she came to our first 3 sessions. And so we have Stoke Wishmeyer. Can you deliver that to Mr. Stoke? Stoke is one of our local directors from Silver Hillsborough. We appreciate you, Stoke, attending and being part of our. We have Ann Osby.
Yep.
There you go, Ann.
There you go,
Ann came in strong at our second session. And then Juanita Akers. Right here, man.
The frozen food queen, right?
We'll make sure Fonda gets served. Okay, now for the time we've been waiting for. Shake it up. We have a drum roll.
Oh,
Mine, did you, Rick?
What's that?
You didn't forget mine in there, did you?
We're working on it. We'll have Miss Martha is going to do the drawing. They're shook up, stirred up, grown up. And the winner of the iPads, Lisa Bone.
I gotta make phone calls now. Tell everybody.
Thank you very much.
Thank you.
See what, that,
Congratulations.
that question put it over the top.
Kevin, thank you very much. We wish you
That's
much
it.
success.
She asked a question, she got
As
the
you
bonus
go
gift.
into your continuation of your business, starting your new business, you know, we want to be your partner if we can. Thank you very much,
you. I'll
Ann.
be seeing
Stoke,
you.
good to see you again.
And
Thank
pay
you.
yourself first. Start a little account for yourself. Pay
Exactly.
yourself first.
On behalf of First State Community Bank, this concludes it. You get to go home a little bit earlier tonight. Thank you, presenters. Thank you, helpers. You guys have a safe trip home, and stop in and see us at any of our branches. You have friends in all our places.
Well, thank you so much. It's been very informative, very well worth the time we spent here.
Yeah, well.
Thank you.
Kevin, Chris, thank you guys. Appreciate it.